Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, as always, here with Joel Elconin and Dennis Dick. Got a good show for you folks today. We're going to talk about the earnings. Over the weekend, we had Berkshire, so we're going to talk about that. We're going to talk about race this morning, SeaWorld, Lowe's. Some good ratings today. It's been a while since we really discussed ratings on this show, so we'll talk about that. Talk about Apple, talk about GE. Joel had his first ride in the Tesla, so maybe that'll come up, although I just brought it up, so we'll see. Anyway, good show for you folks today. Our guest is Farah Homsy from Hamzei Analytics. He will join us at 8:35 here to give us his take on the markets. Joel, what is the word in the overnight session or the weekend session?
We got a nice range here, nearly 17 handles. We sold off Sunday night. We got as low as 27.12 and 3/4. Nothing there, folks. I have no level there for you. Friday's low. That's down to 26.99.50, potential target on the downside. On the upside, we tried to bust through 27.30. That's a big level for me. 27.29.50 is your pre-market high. Things really open up to really in the 27.30 handle. I will note that Thursday's close at 27.38. We're 14 handles. That has been the high close of the rebound. Crude hanging out here in the lower 60s handle, up a dime at 63.24. We did have support at the 62.5 area a few months ago. We're trying to find a home there, potential double bottom. 62.63 was your low on Friday. So far today, 62.52. Gold down 250 at 1230.80. Silver in the red by 7 cents at 1468. Bitcoin trying to show some life here, but still mirrored in that trading range from 6,000 to 6,500. Triple D, how was your weekend?
Sick.
Sick.
Mostly, yeah. Okay, so the boy got the flu there Monday, Tuesday of last week. The girl got the flu Thursday, Friday, Saturday. So I got the flu last night.
And you're better already?
You know what? I feel pretty good. So I went to bed early.
Pale.
And maybe it wasn't that early because of the time change, but I ended up going to bed at 8:30. So I guess it's 9:30 old time, which, typically I don't go to bed till 10:30, 11 o'clock. So I went to bed a little bit early and got some sleep. And I woke up in the middle of the night feeling just horrible around 1 o'clock at shivers, chills. I was like, oh, it's going to be a horrible day. Woke up this morning, though, and you know what? I think I got some sleep for once. I actually feel okay. So, knock on wood. Hopefully, it's just a 24-hour virus here. So, anyways, yeah, I'm feeling okay this morning. Not better, but not bad.
Okay. All right. Well, I want to start.
How was your weekend? Big victory again for you.
Big victory here. I guess this college team was supposed to show up, Penn State, Nittany Lions, but instead the Penn State Pussycats showed up and Michigan put the hurt on Penn State, and that was a great victory. And I got to do on my ride up there, I get to go with Luke and Jason's son Josh, and a gentleman from Robin Hood. And my first ride in a Tesla, and I got mixed reviews.
What's your reviews? Tell us about it.
Well, it's very nice.
Why?
Very, very nice. The car is very, very comfortable and smooth ride. I'll tell you, the autopilot thing, that's what I really want. I just want to be able to sit in that car and just sit back and do nothing. And Jason had it on a couple times, and
the car's driving itself when it's on?
It does.
Like it's totally driving itself.
Yeah. Yep.
Do they all have that?
Don't ask me questions I don't have the answer to. It's just the one that he was in. You do need to touch.
How's it work?
He has settings here. And he just hits the settings, and he set the speed limit, and then it just has all the mirrors looking, and it changes lanes. You could give it a destination. He didn't let it guide us in all the way to our first destination, so a little bit skeptical there. But one thing I was really impressed is we were going into one exit and kind of had to do some maneuvering. And so we were going pretty fast, and then we cut over in a lane, and there was a car in front of us, and we were going very fast, and the car slowed down perfectly, like better than you could do if you were hitting the brake manually. So I was very impressed with that.
Well, I need to get that because I get these long road trips and stuff. Man, wouldn't it be awesome to just like hit the button and, boom, okay, I'm going to hit my sleep button. The car drives itself. Now I'm going to kick back.
No,
and
you
go
got
to
it
sleep
every 2
hours.
minutes. You got to hit the wheel every 2 minutes.
Well, eventually we're going to get to that, though. I mean, if it can do it, like 5 years down the road, we're not going to have to drive anymore. It's going to be awesome. I just sit back and kick back. If you have too much to drink, you just hit the I've drank too much button and it drives you home.
Wait, so what didn't you like about it? If it has a mixed review from Joel, what
didn't you like about it?
What was not great?
Just that, like at one point, Jason said, "Okay, we were on M14. We're going to our first destination," and he was like, "I'm just going to let it guide us all the way in," and he put the address in, and there was a lot of traffic and everything, and it didn't. We didn't do that. And then it came back out of the driveway. I was asking a lot of questions. I was driving Jason crazy. So I'm neutral.
I would be too.
Okay, so a hard neutral, a hold.
Yeah.
Okay. Fair enough.
What Tesla model?
That's fair enough. Fair enough.
S?
Hold rating from Joel. He's trying to figure out what model it was he was running in now.
It was S.
Model S. Okay.
Yeah, but it was fun. It's a nice ride. It's big and it's comfortable and everything. So I'm neutral here. I think there's some resistance. I'll just go technical here. 350 is a big level. You clear that. 380 is when it really got crazy, right? With the with the takeover at 420. But it's had a nice rally and it's holding up here. And it is. And not the greatest tape either over the last couple of weeks. So but let's
biggest risk is headline risk. That's always, we know headlines can drive that. If Musk says something stupid or, that's always the risk here with owning Tesla. It's more just, what might Musk say?
Exactly.
Anyways, we know he's very outspoken, but that's Tesla. Let's talk Apple from Friday. Crazy moves in it. It's down significantly again here this morning. So if you came in looking for an Apple bounce, you are not getting that. It's down another $3.50. And it seems like when the stocks go out of favor, they stay out of favor for a while. And I know my buddy Chris Bannon, I give him a shout out. He sometimes listens to the show. He plays that strategy. When the stocks report disappointing earnings or they disappoint the street, he puts them on longer term for swing trades because he's like, if they don't bounce right back. Once the dust settles, like sometimes they bounce back that day. But if you get it settled down and chase a whole day or two down, it doesn't typically bounce back because of the overhead supply issue. So it's actually a good strategy just to be short the stocks that are out of favor and long the stocks that are in favor. So that's always worked for a long time. But it looks like to me that Apple's now out of favor.
Spencer, you want to give the news?
Well, yeah, they had a headline overnight here that they had that Apple had signaled to their suppliers that there was weakened demand for the iPhone XR, which is the affordable version of the iPhone X, and they had told their suppliers to not increase production. So they had a planned production boost. They canceled it, which is a signal that demand for the XR was weaker than expected. I guess that's what's hitting it this morning. That's the specific catalyst for this morning.
Yeah. So we're down another $4 here, Joel. What do you do now?
Oh, I tell you, Rookie 22 was in the chat on Saturday, and he said, "You may think I'm all nuts, but there's a gap on Apple around 195 to 197. So on Friday, he bought some of the 195 puts. And I was thinking about that too when I looked over the weekend, and it gave you a nice pop on Friday to short into. So now it's going to be a little bit tricky, shorting it in the hole down 368. But you definitely going to shake some people out at 200, right? Nice round number like that.
I think you're going to go down there and hit it. Why not hit some stops under 200?
Exactly.
So I agree. I think we're going to test 200 this week and not today. Down 204. So you come this far, they usually like to take them through the big hole numbers, at least to hit some stops. Let's see if you can rebound at that point and get back up over 200. But Trent, not your friend here, talking against my book again. I do own an Apple in my long-term investment portfolio, sticking with it, but definitely looking more out of favor. And that it's a kind of a long head and shoulders there. Not that we're big pattern traders, but September, you can see the left shoulder and then the head at the beginning of October. And right shoulder formed for about a month. So it's like a 2-month head and shoulders. Now, obviously, it's breaking down. And I don't know, I can see this thing at 190.
Yeah, I mean, you did. We are trading below your August 8th low of 0452, and that gap up day from earnings 197.31. Actually, there's a gap from 192.14 to 197.31. So that's a big old error. And that candle, that second day after earnings, you had a couple big candles there. So some work to do on the downside. Tricky point is, shortening on a rebound or shortening in the hole, trading at the lows of the pre-market session.
Market has given back. We were up a little bit here this morning. We've given it all back here now. Qs actually just went to the red here. So obviously Apple probably weighing on the Qs overall. But give us your thoughts here, just S&Ps, because we were talking in the pre-market show. And I mean, this is a tough market to call day to day. And then obviously, we do a lot of swing trading. We do day trading here. And the day trades are okay. It seems like it goes one direction for the day. But day to day, Doug Cass always says the market has no memory, sometimes. And right now, this market doesn't seem to have any memory at all. It's headline driven. It's tough to call, from day, what's it going to do tomorrow? What's it going to do the next day? I mean, it depends on what the headlines are. Depends, we're coming out of earnings season. That's been a big catalyst. But I mean, you look at that, we got a nice lift. I thought we could, hold up and rally there on Friday. We did in the morning, but we gave it back by 10 o'clock. We were starting to turn red, and then it turned ugly there, and we sold off significantly on Friday. So it's a choppy market.
Just not a healthy rally on Friday, that big overnight move. And actually the moves on Wednesday and Thursday, a lot of them were generated overnight too. So, stocks just are responding to the futures, having to open up higher to get to fair value. But I don't think that the institutions really, unless they were taking stabs on Monday last week when we went down to 2603 and threw out some big bids. I don't think that the market is settled down enough for, the institutions, the bigger players really to get enough stock. So they're not going to let it go away too far right now. I think you have some indecision here with the midterm elections, and we need to bring down the average daily range. We need things to calm down in order to have a sustained rally. Our 9-day average trading range is 58. Earlier in the year when we were grinding higher, it was 25, 30. So with the volatility still in the market, I think we need to back and fill a little bit. I don't know if that 2603 is good, as that's going to be the low of the move before the Santa Claus rally, but just feels we need to do a little bit of backing and filling here.
Griffin wants to talk about the Treasury. We can look at the TLT and the market positive correlation. I saw that Friday. I don't know if I see it overall, the TLT and the overall market. I mean, you've got the TLT week here, and you've got the market, has rallied over the course of the last few days. On Friday, definitely, both were weak. TLT was down significantly, and the overall market was down significantly as well. So it's just, it's a choppy market right now, and everything's getting chopped up. But the TLT is not healthy here, and that's telling you, as it continues to go down, that interest rates are still obviously an issue here. If you look at the banks, they've rallied a little bit with it, but you're starting to see a little bit of weakness in the utilities. It's had the safety trade going, starting to look weaker. The TLT continues to decline. I'm not sure it's going to do that. Like I said, this market day to day has been very tough to call. But if it continues to decline, you got to think eventually these utilities, which have been a safe haven here for the last month, and the market weakness might start to roll over.
I mean, it has been correlated very well for a long time, and you do get individual periods where they don't. So to me, they're pretty highly correlated. The TLT started breaking down just a little bit earlier. I mean, the only thing that it's kind of like a two-edged sword here, because if interest rates aren't going up, then the economy is weak and we're in a recession here. So pretty much you just want rates to be stable and a stable interest rate environment. People can know what to do with their fixed income, with their different assets here. But still rates are at historically low levels, and I don't see that changing.
Berkshire Hathaway did report earnings late Friday night, and the stock getting a lift here big time in the pre-market. It's up $6. So obviously they like what Warren was saying here. It always seems like when you get a big move in Berk, it's still a fund. So it's still like underlying holdings that are going to drive that. And it's value, and it's always an indicator of value. But I always think when you get like a $6 move overnight because of their earnings, it's often a fade. And I'm not sure that's going to be the case here now, but the fade trade in the overall market has still been there. So I don't know if I'm chasing it up $6 here today. Joel, thoughts on Berkshire Hathaway as we get this
I
nice
agree with you.
2.77% rally?
Yeah, I mean, your initial surge, they do it Friday after the close, so you didn't get to make a trade until the morning here, right? And you got to pop over 215. You went to 215.10, and then
It's already leaking.
Yeah, it's already leaking here. I'd be probably more content to come back and try and buy this in the 210 area. Several highs just above between 210 and let's see 211.50. So that was the area that it broke out from. Got a big red candle to claw through here. I think that's probably the day the market got crushed and went from 223.76 to 213.10. So the longer it takes to get up to that pre-market high and take it out and keep on going, the more likely here I think you have a little bit of fade. Very big move. 17,500 shares, up 5.73 or 3%. So that's what it's looking like from this perspective.
Two numbers worth knowing for the Berkshire report.
Sure.
One is operating profit in the quarter on a year-over-year basis, and nearly doubled from $3.44 to $6.88 billion. Big increase there. And also they announced that during the quarter they bought back $928 million worth of stock. That's a lot of stock to buy back.
It's a big buyback, but again, we knew buybacks were coming. Remember, they popped last time when they changed the rules on how often they can buy back, and Berkshire didn't buy back stock for years. So we kind of already knew that they were going to be doing some buyback. That was when they changed. Remember when they changed that rule and it got the $5 or $6 pop because they had their own, so they were a little bit more lenient in how they were going to buy back stock. I can't remember the date on that.
That was relatively recently, right?
Yeah, I'd say in the last couple months. It might have been August when you had that big gap up there in August from 200 to 205. Was that it?
I remember that. I don't remember the exact date. But
I feel like you already priced this in, and now the market's giving it to it again.
Yeah.
We already knew they were going to do a buyback. They basically announced it back in I think it was August. It may have been July, but here you are, and so it's getting it pops on it then, and it pops on it now too. Yeah, I'm not a believer. Not that I'm not a believer in Warren. I'm just not a believer in the $6 gap up because it bought back some stock.
I have to agree with you. Let's talk natty gas here a little bit. The chat is buzzing about it here. Natty gas futures, huge move here. Historically,
2-day move, real.
Yeah, you're right. It broke out here with the vengeance. And Spencer, you said it was we got a cold front coming in or something?
Apparently, I don't know if that's the cause, but from what I saw, it's going to be a big cold front. But I don't know if that's going to be the reason for a pop of this magnitude here this morning.
All right. I'll just say, this chart, this long-term chart on the natural gas, I mean, this is a big move. Historically, this is one of the biggest moves I can remember. And, with commodities, a little bit different than stocks. Once they start rolling in one direction, it's pretty hard. So I'm not going to stand in the way of this. I would look at the low this so far that it made. I mean, it just created a huge gap on the futures between 3.313 and 3.347. So as long as it stays above the gap here, I would just try to just keep moving my stop up. And UNG is also having a really historical move here, but
big one.
Just keep in mind, like, oh no, the cold front, it's not going to be as cold. Boom, they'll take the air out of this thing as well here.
And remember, UNG, you've always got the rollover that keeps deteriorating the value over time. So these are short-term trading vehicles. You don't want to stick these in your long-term investment portfolio because if you stick UNG, it naturally declines over time. So short-term trading vehicle is what I would say for UNG. I mean, you can get swing trades and you can get some nice moves on it, but if you're buying UNG and I'm going to hold this for the next 5 years, I think you lose money because of the rollover. They're always constantly rolling over and they have to buy the next month out, and that costs money to do it. So that's why it deteriorates in price over time. And if you look at the long-term chart, you can see that deterioration. In the long run, it doesn't perform well with natural gas prices at all. I mean, look at NG compared to the UNG over the course of the last 6-7 years. UNG was $200. Now it's, $27 or $28 here in the pre-market. And if you look at NG, it doesn't look anything like it.
And also you could check your commitment to traders report. I'm not sure where the institutions are standing on this, but are the commercials, if there's a big short position, there'll be a few margin calls here and whatnot. So looks like out of oil over the last few weeks and into natural gas.
171,000 shares traded in UNG so far this morning. That's a lot.
Oh, it's trading like crazy.
That's a lot
really
for
active
UNG.
here this morning.
Yeah.
A couple other earnings reports here this morning. We are going to get some interesting ones here this week, but this morning we already got Ferrari Race, RACE. Let's jump to that one.
Okie dokie. Race Q3 EPS 89 cents versus a $1.13 estimate. Sales of 955 versus $960 million. So a slight miss on the sales, a bigger miss on the EPS, but they reaffirmed their guidance for the fiscal year. So have not looked at the chart yet, Joel. What are we?
No, we're down $2.93 here. Not trading the primary market. Your pre-market low stands at 115.93. Nice buck bounce off that. Just longer term here, the stock has been in a downtrend since it got over 140 back in September. Let's see if we can get back down to the low of the move. That stands at 111.71. And ahead of that, there were three lows, 113. So I see a lot of support here between 112 and 113. Yeah. If we get there today, coming back on the upside, pair of highs at 121. That's your super extra major resistance in race.
Also reporting SeaWorld, SEAS, and this one's the shocking one to me is how resilient this thing was in 2018. I mean, this had a pretty darn good year. Started the year in 2018 down to $15, got over 30. So you're talking about over a double. It's pulled back off of those highs, but we kind of thought Shamu was dead. And you know what? Shamu's got some life. 26.50 this morning bid. Spencer, details.
Yep, Q3 EPS $1.10 is a 2-cent beat. Sales of 483 versus $472 million.
Joe, what do you think of this chart? I mean, you look out at the dailies, and it's had an incredible 2018. It's come off the highs, though. Is this a dip to buy on this one, or you think there's, possibility that this continues to give it back?
I don't know. Since I haven't looked at the stock since it was like $6. I mean, they didn't get that low. I'll just go technical on you here, Dennis. And you got a double top, 27.22, 27.27. So until it can prove that it can take out that area, I say the path of least resistance is on the downside. Pair of matching lows too at 20, actually 3 lows in a row at 26. So let things shake out between 26 and 27.25. And I would go that way. Looking at it just technically, don't know anything about the fundamentals of the company.
Wow, we know it's Shamu. Lowe's, LOW, closing some stores. I did see that headline go by. Stock is slightly down on it, but not down much. And it's funny. Sometimes they close stores and, you automatically think that's a bad thing. But sometimes they actually rally them on this news too. So I wouldn't say just necessarily because they're closing stores, it's going to get the beats here today. It is offered down 96.75. So it does look like it's going to open a little bit weaker here. But with these things, like put Lowe's and Home Depot on top of each other. Put the charts. These things are identical. I mean, these two stocks, pair traders, are all over these two stocks. Always, I pair trade them too. I mean, it seems like, when there's ever a deviation, it seems to come back into a certain extent. But in the last 2 months, these two stocks are just like right on top of it. And that's maybe to do with the overall market. Get market volatility, the correlated stocks are going to move even more closely together here. But Lowe's a little bit weaker this morning.
This is also confusing this morning because Lowe's, the store, is announced they're closing some stores, but Lowe's, the holding company, ticker L, had earnings. So maybe that is causing some confusion here.
What had earnings?
Lowe's.
Oh, that's different company.
I know.
Right?
I know.
He
I'm
is.
saying that could be cause for some confusion this morning.
Yeah. So LOW did not report.
No.
Yeah, it's L.
Oh, exactly. So Spencer was trying to unconfuse us, but he confused us.
Sorry.
This is one sector, the housing sector I'm talking about, that really is keeping me from being super bullish here. And Gordon B makes a good comment in the Google chat. If the economy is great as the government wants us to believe, then many sectors, including housing, would be doing better. Thus is, Fed kind of ignoring things. So that's, to me, when I look at like the XHB, and I know it got a little bit of a bounce, I mean, a lot of times, the housing is a leader. And if that trickles down to a lot of different things here. So these stocks did get a move off the Lowe's and Home Depot here, but I don't think nearly as much with the market. If you look at this from a swing trade in Lowe's, I mean, you can hang your hat on that low at 91.61. I don't think I want to be involved with it if it did take that out. And for resistance here, I mean, we are off considerably off Friday's high in 99.11. So if this was good news and everyone loved it, I think the stock would be trading up over $100. It's not here. I think some more work to do on the downside here. I don't think overall closing stores is a good thing.
No, I don't think so either, but it's funny. The market shrugs this off. Remember the Target? I remember I got burned so hard on the Target. This was years ago, but they had all the Canadian stores and they were going to take like a huge hit because they closed all the stores in Canada. I was like, well, this has to go down. And I shorted a bunch of Target basically flat on it. It rallied $6 in my face on that Target. And I was just like, I'm like, this is ridiculous. Why is it rallying so much? They're going to take a huge write down. They literally had the stores open in Canada for 6 months and then they close them all up. I mean, how is this good news? You know what? It didn't matter. The market, rational or not rational, rallies in my face and it stayed up for a long time, like for weeks. So you just, sometimes it's funny. These stocks don't necessarily, just because you think it's bad news, sometimes it's not. So that's just my word of warning here. If just flat out shorting lows because they're closing stores, it could go down, but doesn't have to do anything.
Big decline here. I mean, I'd love to see it do some kind of retracement. I will just say that the rebound in Lowe's and Home Depot commensurate with the market is just not there. So if Mr. Market decides to go doing some backing and filling, these exactly weren't the strongest stocks on the rally.
Baba Thrasher saying we got multiple price target cuts, and we've been talking about this on the show for a while. We knew these were coming. I mean, they're all out to lunch. Baba's come down significantly. When we were analyzing, I think only one person had a sell rating on Baba, yet it's down 70 points from the highs. So you knew eventually there's going to be some price target cuts, and we're getting, I guess, 4 this morning, according to Thrasher. You say SunTrust, JP Morgan, Susquehanna, and Benchmark all cutting the price targets here this morning.
KeyBank.
Do you have confirmation on that too, Spencer?
I got confirm on the KeyBank. Confirm on the the SunTrust was from Friday. The KeyBank is this morning. Did not get confirm on the other two.
Okay. And regardless here, stock is trading down about $2 in the pre-market. Had the ridiculous pop up to 160
Did you
after
sneak
hours.
out? Did you sneak
No,
out?
I did. And I even said it. I was like, I should just sell this because 30 points in 3 days is just, it basically got half the losses back it got the entire losses back for the month of October, which is a horrible month for stocks, in 3 days. So that was faded massively. It's down here now. Now you start talking, though, 50% retracement of the recent move. I know you can't see that on the chart, but it was trading over 160 on the after hours action after reported earnings.
It did.
So you go 130 to 160, 145, you're in there. So I don't know if I'm coming in here selling it necessarily here now. I actually think, one of the short-term low could be in. I mean, it's not a bold call because it's 15 points off it, but I think that 130 is safe for now. So I actually like this on pullbacks. If it was to get down like 140 or 139, I might consider adding to my long-term Alibaba position.
I'm going to wait till it fills the gap underneath that it has. It had that big old gap when they said they were doubling revenues, and you got a gap in this thing. You had a high one day at 125.91, and then the gap down 133.10. They started to work into that a little bit here. So just a horror. I just couldn't even, the price action from that stock on Friday, I have no interest at any level putting any of my investment dollars in there. That was just to 160 to just get crushed like that.
Yeah.
And this thing has done this on several occasions, because it's such a heavily traded stock. You had to break down to 155. Oh, we're at 165. Nope. Then you had the extended decline to the 130 handle. Oh, we're back at 150. I mean, this has done this on so many occasions here. What's going to be the catalyst? No more earnings coming up for a while. And as we talked about, there's a lot of overhead supply with analyst ratings on this one. Really nowhere to go but down. So not interested in this one.
Just jump in here 1 minute before imbalances here. You had a Spotify here. I just want to go to this one here because it's getting a $3 pop. Buyback, Spencer.
Big buyback, $1 billion.
It's The stock is getting a lift here in the pre-market. It's up $3. I mean, you got an argument there at the 130. You got down to 131.01, then 2 days ago, you got down to 133.25. You can argue a little bit of a double bottom there. It's starting to show, and it's not really showing life. It's showing life here this morning because of the buyback, but I don't know. Evaluation, is still, I feel like an issue here, but especially if we're going to continue in a risk-off environment. But if you think we're going back to risk-on, I could get interested on pullbacks here.
Just caught one quick out of the chat here. You do have Singles Day coming up on
Baba.
November 11th. So
that's typically a really good day.
Yeah. So I get you. We'll have an article out about how a stock is performed on Singles Day. How it traded the few days before and then the few days after. I think so. If you are looking for a little bit of an upturn catalyst here, that is a possible one. Spotify, I signed up for an account to listen to one song and then I haven't went back to it.
What song?
A new Florida Georgia Line.
Joel's a country fan.
Oh yeah, I went to country.
Oh, he's hardcore country.
Two Fridays in a row, we saw Chris Young, Morgan Evans, and Dan and Shay on Friday night. It's in a box at LCA, and I'm telling you, that is the way to go. That was a really good concert. But Spotify getting a pop here. Pre-market trading. Is there any volume? Not much volume. Let's see if we can get to 142.60. Your 2-day high. Well, I'll just give you two highs you got to get through. Friday's high, 143.88. Thursday's high, 145. So there's your potential resistance points. A lot of times on these buybacks, I mean, they're not buying the stock back like right now. I mean, they're not in there lifting offers. So let's see if it can continue through the 145 area.
Let's talk General Electric here. It's been down to single digits here and getting heavily down in single digits. It is getting a little lift here this morning. What's the details that are making GE lift this morning?
Well, there's a couple things.
The one's negative from Gordon Haskett.
The one is negative, but they did have an insider buy. The CEO, Lawrence Culp, bought 225,000 shares of GE at an average price of $9.73 per a Form 4 filing.
So CEO bought how many shares?
225,000 shares at $9.73 price average.
All right, so 200,000 shares times $9. So the guy put in what, 1.8 mil?
Yep.
I mean, it's not a huge investment here. It's not like, whoa, we bought 50 million worth and he really believes it. I mean, it's trying to give it a little vote of confidence here. But these guys, 1.8 million, probably a drop in the bucket for him. So, because the CEOs make some serious money, obviously. So I don't know if I'm running in here and jumping and buying GE because the CEO bought 1.8 million worth of stock. It just doesn't seem enough to me. But anyways, it's getting a lift here. And it was trading down before that because you have a negative Gordon Haskett note from our friend Inch. Talk to me about this, Spencer.
Yeah, he said the stock could go to $5 this morning.
Yeah, so I don't think he officially lowered his price target. He was just saying, this could eventually trade to $5. So that's, I don't know where, I can't analyze. I'll just tell you, I'm sticking. Inch has been all over this. So we said it, when he was on our show a week ago, that I'm not getting bullish GE until Inch gets bullish GE. When he gets bullish GE, I might jump in. But as long as he's negative on the stock and he's saying $5, I mean, he was the analyst that was all over it when it was 30 and saying that they're going to have to cut the dividend and stuff. And people are like, what is this guy talking about? Dead right. And you know what? I'm not going to argue with Inch here. So if he's still bearish on the stock, I'm staying bearish on the stock too.
906. Someone came in with a piece. I was watching this thing off the open on
They probably
Friday.
read that note.
Yeah. No, I'm talking about on Friday.
Oh,
someone
Friday,
just came in with a piece right in that first bracket, and they just
little washout.
Yeah, I think you had some institution just thrown in the towel here.
That kind of looks like a little bit of capitulation.
It
so
does.
That would be the argument if you're thinking, could get a little dead cat bounce here. I mean, that's a good point, Joel. I mean, that looks like a little capitulation there off the hop, where it went from 975 down to 906 in a matter of like 10 minutes. I mean, lose another 10%. So if you're going to lean, definitely, I don't want to be long. This is going to make new lows, but there is an argument there.
Yeah, and 906, multi-year low here. So after it got the pop off that number, it hit 906, it popped back up to like 935, 940, and I'm thinking, wow, this thing's weak. Maybe it's going to go back and test that $9 level. But then I just kind of looked and I'm like, man, that was just one big, someone was just, sell me, 10 million down to $9, just get me out. And you see those kind of orders in the first bracket between 9:30 and, 9:45. But when they start to drift intraday, you don't have those same kind of orders. So it's just hanging in here. I think right now, I did a little weekly work on this one. And until this thing gets back over $10 and holds $10, 2, 3, 4 sessions, leaning towards the short side here in GE.
All right. Yeah, I think rally's still to be sold in it too. 8:35.
Yeah, it is 8:34. We're going to take a quick break and bring on an old friend, perhaps the oldest friend of the show. He's been coming on the show since 2014. Farah Homsy, the founder of Hamzei Analytics. We'll be right back in a moment with Fari. And welcome back, everyone. PreMarket Prep, Spencer Israel, Joel Elconin, Dennis Stake, now joined on video by Farah Homsy, founder of Hamzei Analytics. Fari, how's it going this morning down in Naples, Florida?
Well, we're dry, so that's good. Temps are around, let's see, 69 degrees, and range is 84 to 69.
All right, good. So it's been a while since we last spoke, Fari. I guess, what are your thoughts on this market right now and kind of where we're hanging out in the major indexes?
Well, I can also share a screen if need be, but quickly, our timer charts, which directs us moving forward, says we had a couple of lows. We're in a dead cat bounce. If you want me, I can put it on if you want me to. Yeah, sure. Hold on.
Yeah, sure.
Share a screen. There you go. And you see it now? Should be able to show you the screen.
Yeah.
Okay. If you look at the volume peaks, those are crucial. Volume ratios. And you can see the timing. This is a dead cat bounce. We're not going to 200 bar. I'm not surprised. That's early because we have major events in front of us. Elections, obviously. Fed. Of course, ongoing trade wars. Yesterday, Iran sanctions went back in. On top of that, I'm expecting Friday more information from the great Princetonian Bob Mueller. So we're net short. We have to. Intraday, sometimes we have to trade futures on the long side. But in terms of longer term bias, it's a screaming sell for now until we get to some form of capitulation. And that usually it includes a high volume spike. We haven't seen it yet.
So what would be the sign? So you're looking for that high volume spike. I mean, we did spike up, and if we just looked that one day, and some people on CNBC were arguing this, if we look back to the 29th, when we got down on the SPY to 259.85, there was a few analysts there on CNBC saying that was the capitulation bottom there. You're not seeing that.
Well, we did, but look at what the 2 days forward were. Usually when you get into a capitulation, your McClellan oscillator is a lot lower. And then you get 3 to 4 days of a screaming runs, 200, 400, 500 points. Okay, it passes in history, and we're at lower scale back then. Okay, there's always Dow wasn't 25, 26,000. So you should, percentage-wise, you should see at least that, if not more. We're not seeing it. Look what happened on the Wednesday. That when you have a wick like that, that's a bad news on the run-up. So this day, juiced up into Apple. We talked about it. We said, listen, the keyword is Apple, and here's the proof. Apple missed. We had good jobs, but look at how they turn around the jobs. Now, the other problem we have is the Fed. Look at the treasuries. This is the 7-year highs running through the 90-day discount, a 5-year, 10-year, 30. This is across your yield curve. As you look at it, yeah, the treasuries on the 30-year are coming back up slowly, but the leases and the mortgages are heavily impacted. Look outside here. You've never seen so many for sale signs on real estate. People are panicking a little bit, and the real estate signs are sales are down for 5 months in a row. Housing is a little that's housing. Motorsports, Detroit is slow. If you add all of these together with the high rates, I don't know. We'll see. I mean, there are too many unknowns.
I mean, it's economics 101. I mean, we look here, and if you just, and I've argued this before, we knew, like the Fed said, in 2017 that they're going to raise multiple times in 2018. And if you would have just, went with that, look what the TLT has done since then. We started the year at 125 and now we're down at 112. So, you just tidy lost over 10% here, on the TLT. And that's just economics 101. I mean, a rising interest rate environment here, and overall for the stocks, it can't really be good.
Right.
So Fari, how do you approach this market now? You were saying you're net short. So what would make you turn, and start covering some of your shorts? What would you need to see to make turn around?
Yeah, I like to see on it. I'm not sure I'll get it, but I'd like to see weekly chart retest of this one. That's what I want to say.
Well, the retest to hold.
Yeah, and on a sigma level. So what you're gonna probably, if you do the math, you'll be 24 and 100 points below the low we've seen so far this past week, 100 points. So 1,000 on the Dow. Now that should accompany a pretty decent volume. Again, this is the headwinds. You got trade wars. You got the election, which is tomorrow. Fed here and the rates. And what? Why is crude selling right now? Come on, ask yourself that. I think you're getting a lot of defensive plays there. And look at growth versus value. That's usually a good indicator. Nobody wants the growth right now. If my last week, this time I was saying to people, if Apple misses, we should just ship Silicon Valley to China and get some of our bonds back. Forget the spying and what do you call it, the IP. Just ship them. Just ship the whole Northern California over. Get some bonds back instead.
We're on the line with Farah Homsy. He's the founder of Hamzei Analytics, brings his wealth of knowledge on aggressive equity options and index futures trading to our show. Farah, like I was just talking about, since we made that low last Monday at 2603, it's just not really a constructive rally here. You have a lot of big moves overnight, creating a lot of, forcing people to buy stocks just to bring it up to fair value here. Is that a fair term? Like, it wasn't a healthy rally. We need to back and fill. I don't think the institutions have really been able to get the stock that they want. Is that a fair characterization of the rally later in the week?
You're also a guest host or a contributor to Stocks and Jobs. We talk a lot about Seinfeld over there. Market is like one of the episodes of Seinfeld. We're talking about two people breaking up, and then Jerry says it's a Coke machine. You can't throw off a Coke machine in one move. You have to shake it a little bit back and forth. That's what we're going in here. We're not going to make a bottom, honestly, on a first push. Okay, maybe it's fake news. You can, and then you'll come back from a scene of the crime and everything goes away. This is not fake news. This is not one event. We've had a lot of disturbances here. It has to work itself out. And for the sake of nation, I hope this thing stops here. But listen, all depends. If the House is gone, you could have inquiries coming into the gazoo, to the White House and GOPs. You're going to get to a point where we will meet or test November 16th. That's 18,000 on the Dow. Okay, around I think it's 2K on the S&Ps. So if you look at that potential scenario, now I come from a background of strategic planning at Northrop. You have to play the what ifs. It's a multi-level chess game, ongoing. if something like that comes true, I'm not talking about today or tomorrow. I'm talking about, let's say, by January 1st. Then you'll be looking at, these would be bargains if you sold here. If you were selling up here, you probably got a pretty good deal, pretty good premium, or those mark-to-market values will be. So when you get at these crossroads with high volatility, I say, I told one of the hedge guys in New York one time, I said that opinions are a dime a dozen.
Fari, what about, have you ever seen a market just more sensitive to, I mean, obviously Twitter hasn't been around forever, but I mean, you're getting the S&Ps and, you know, moving 20, 25 handles on a tweet. I mean, to me, just overall from like a, you know, like a market structure standpoint, I mean, you know, that has to be a little bit worrisome. I mean, compared to that rally that we had earlier in the year.
A little easier. Joel, let's look at NQs. The NQs, you get 100 points moves. In one move, in one leg, boom. I mean, and it's non-relenting. It doesn't pull back. It's like guillotine coming at you. 100-point moves. It's just, look at some of the ranges at the end of the day for that day for NQ. I haven't seen like that before.
And when it's wild like this, Barry, I just want to ask you, how do you control the risk? Like, you're putting on positions here. How do you control the risk when you're seeing that wild volatility?
First of all, we run multiple models. One of them, obviously, our main flagship is what we call the OTF, other time frame. We look at how the big guys are playing, the whales. What we had to do recently is to take that data. We've been researching this for about, since pretty much the beginning of their year. You know, from the February on drop, we had this issue we had to address. And we knew another spike will come, not sure when. And that was, we could be set up such that within the realm of the whales, we have to categorize them. Remember, we don't go by time. This is a standard chart. We run our own charts, prop chart, that the X value, the X axis is not time. It's actually activity-based, price, you know, block size and frequency. We had to refine it one more time, what we call OTF fractals. What we look at is medium-sized whales, big whales, and smaller whales, way above mom and pops. I've noticed the mom and pop charts don't work. They're often wrong, and they get late, and they get slaughtered. So what we try to do now is shift more toward the bigger whales. That means less signals, more patient, as Tico says, drink more tea. You gotta have more tea in your hand, read a little bit of Rumi, don't jump in, let this thing settle, and then, you know what? You gotta expand your stop mentally, okay? This is a tough one to put stops on one of these days. They're gonna hit it. The vol is so high. So you need to have a bigger stop, trade a little bit less, number of contract, and again, time it very carefully. A lot of times now, I have to close the position and retry again. I know it's wrong the moment I get in. So let's try another half an hour from now. Let's figure out another hour from now. Let's see what the same indicators are saying. Are the big guys coming in then? Because obviously, if it's not taking off, they're not coming in now.
Where's Captain Tico?
Long or short?
Is Captain Tico around? Is he around the desk? I don't think we. No, you keep him in the other room.
You want me to get him?
Can you get him? Can you get him real quick?
Hey, Capitan, let's go.
Did he just walk away? He just walked away.
No.
He's bringing Captain Tico in, though.
He's bringing Captain.
This is going to be great. I think I follow Captain Tico on Twitter.
For you guys.
Okay, Capitan is here.
There he is.
Capitan, come on, Capitan.
Wait, he lets his dog walk around behind the computers and the wires.
He's trying to get it. Yeah, he's trying to get the dog behind the computer. Just don't eat the wires.
All right. This show.
This might be one of the.
Oh my God, he's gonna knock over.
Most interesting tangents we work on.
Here's Capitan Tico.
Here he comes.
All right.
Where's he at? Oh, there he is. There's Captain Tico. Not as cute as Perry.
Spencer, you got to show this up close. Captain Tico.
Right, there we go. There's Capitan Tico.
All right. Thanks a lot, Fari.
He loves the crude oil.
Wait, lift him up a little bit.
Captain Tico's thoughts. What's Captain Tico think about this?
Listen, he was just relaxing on all night.
Okay, hey, Fari, one quick thing here. The day after the market went down like 1,000 points or whatever, we had Anne-Marie Band on. and she was incredible. And I know you work with her. She said, you know, sell the rips. And that was her stance, and that has been pretty good. Is Anne-Marie said buy the dips yet? Because that's when I'll be comfortable going back long-term in this sector. Where is she buying?
We haven't done a morning video. We usually do our morning video right now. So I don't know what the latest thinking is.
Okay.
We pushed it back because we were doing this, as I
Thank
heard
you
from
very
Spencer.
much. Okay, we'll get you back on again soon.
All right.
No worries.
Bye, Captain Tico.
All right. Thanks a lot, Fari.
We'll see you guys.
Tico.
Bye-bye.
All righty. It is 8:49 now. Where are we at, Joel, on the S&P? Is anything interesting?
We're trying to rally. We're green on the session, up 0.75 at 27 a quarter for this market to get going here. We got to take out that pre-market high, 27.2950. Get into that 27.30 handle. Take care of the high close of the move. That's going to be, I'm not even going to go. Yesterday's, Friday's intraday high is way up at 56.50. I don't think we're going to see that today. I don't think we're going to see Friday's low of 26.9950. So what I'm going to do is I'm going to pick the high close of the rebound here at 27.38. That's my level. We got close above that for more on the upside. Dennis, we had a pretty good question pop in the chat during Fari's segment. Can you address that real quick?
Big Mike was asking, and I did say this on Friday, I'm getting like a $10,000 education here on, and I was talking and referring in reference to Apple, because, you know, on a day, and actually ended up not, you know, and the market ended up following. So I got a $10,000 education because all these tech stocks were higher on the weak Apple report, but you know what? It still ended up rolling over. So the education continues there, because I was like, this is shocking. It was so shocking Friday morning coming in to see Amazon trading up 30 handles and Facebook trading up and FANG for the most part trading higher on disappointing Apple numbers. And I was like, I would never thought that was possible. It turns out my initial thoughts were correct, because they turned around and slammed all those stocks anyways. But it just goes to show, you know, you get a leader like Apple and everybody's expecting, you know, the market to roll over. There was a hell of a shakeout on that off the open. And we, you know, rallied actually on the overall market with Apple being down 15 points. And I wouldn't have thought that was possible. Eventually we did give it back, and probably institutional selling just succumbed, obviously, you know, to too much selling pressure. You know, the overall market succumbed to too much institutional selling pressure. But it was, you know, an eye opener there to see, you know, Friday morning, a lot of tech stocks trading higher and Apple trading down $15.
And the other question here, and this is a little bit tougher one. When you're looking at earnings reports, when they come out, what are you specifically looking for? And I think I would say you already have a plan in your head of how the stock's been trading before the report.
Sentiment,
low expectations, high expectations, overhead supply. Could you just give us a couple quick things?
I mean, the biggest thing is guidance. I mean, you can look at the last quarter, but it's all about guidance. And you can have a stock blow it away on the top and the bottom, and they come out with lowering guidance a minute later and the stock's going down. So it's the biggest and most important thing on any report is always the guidance. So, you know, and you'll have people come in and say, oh, well, it's be on the top, be on the bottom. Why is it down? I mean, in some cases, they can raise guidance, the stocks can still go down too. But over other things being equal, if they're lowering guidance, stock is going down. Usually if they're raising guidance, it's going up. So guidance is definitely the most important fundamental factor from those earnings reports.
And Spinner's thrown in revenues as well.
Yeah, and top line, and we've talked, and Spinner and I have talked, you know, a lot about this in the chat over the course of the last couple of years, really. And in the last year, I mean, revenues, top line, the market has been more concerned with top line than bottom line for a long time. They want to see revenue growth. They want to see if you're growing the top line, you can be forgiven for a bottom line miss. This market has been concerned with top line for a long time. That's why there's so many value traps out there, because a lot of these, you know, value traps stocks, you know, like Ford that haven't, you know, been growing the top line but still making a lot of money have been in the doghouse, because this market was at least, you know, up till, you know, 2 months ago, was only interested in top line growth there. So we are seeing a little bit of rotation. Obviously, we've seen, you know, some of the value names come back here as the market plays a little more defense. But overall here, top line is still usually more important than bottom line.
All right, we have a report of a rumor of a potential merger here this morning. I want to get to that.
What's that?
The New York Post is reporting that MGM and Caesars are exploring a potential merger. They're saying that MGM has hired Morgan Stanley, and the activist investors are pressuring for this to happen. Of course, this would be subject to regulatory approval, which is not a guarantee when two of the largest players in the space team up, but it is affecting both stocks here this morning. So what?
How many times have we heard Caesar in rumors, though, Joel? Like, how many times? Like, over the course of the last year, it's been a lot of rips. You can go back to as recent as October. I'm assuming that was probably rumors there, too. This has been multiple times we've heard about Caesars. And, maybe where there's smoke, there's fire. But it's not even getting that much. If you're wondering why it's only up 30 cents here, it's because this is not a new rumor. This has been multiple times over the course of the last year. We've heard that somebody is going to team up with Caesars or buy out Caesars. So whether that materializes or not, I don't know. But the more you cry wolf here, the more you got to think that there maybe nothing to it.
All right. Let's see here.
What about the casinos, though? Let's just talk the casinos here for a second before we move on, because they've been killed. I mean, look at Wynn Resorts. They've come back the last 3 days. But let's put this in perspective here. Wynn Resorts was $200 in the summer. $200 a share. Well, I guess at the beginning of summer, so May. $200 and $202.48. It got under $100 last week, so quietly cut in half in the last 6 months. If you look at Las Vegas Sands, it's a similar story here. And I know in the last couple of days we've rallied, but Las Vegas Sands back in the summer was over $80, got under 50 there a couple of days ago. MGM, same story, over 38, got under 24. We've had a pretty good pop here in the last few days on these stocks. Do you think the bottom is in these beaten down casino names?
Oh boy, I don't know. The thing with Wynn, though, I mean, it had the problems with its co-founder, and I think that or its founder, its owner, and I think that really, when that bad news hit the stock, and that so really had a catalyst. Boy, you had a long time where it struggled to break out like above 105, and did you get over 100? You got to 92.50 last week. I don't know. I mean, I guess now you're $20 above that. I don't know.
You're chasing.
I mean, when's the sports gambling going to kick in, right?
That should be like a now thing. MGM partnered with the NBA last week, right? I mean, this should be a now play.
It should be a catalyst going forward, you would think. And I know you and I, Joel, we're, looking at this TSG, the Stars Group was trying to play it that way. That has not worked for me. I bought this thing around 25. I mean, overall market here obviously hasn't performed well, but it's come down. But that's how, me and you were trying to play this sports betting thing, was through this TSG, but it's not worked either.
Yeah, I'm gonna stick. I waited a little bit, and I got this thing in the I think
you bought the low, didn't you?
I bought it in the low. No, I waited. They got it in the lower 21s, but
I'm in at 25, so you bought my heat.
But a lot of it, the Macau gambling, I really don't understand. I really don't have a great understanding of the casino stocks, and really the only one I've ever invested in is this TSG. So the chart's
biggest expenses.
Yeah.
That's the only thing. If Macau's giving them trouble, I mean, there may be some fundamental issues here. Obviously, there usually is for declines of this significance. Let's go to ratings.
Yep. You read
There's a ton of them here. We talked briefly about GE, just that note from Gordon Haskin, the $5 potential move down to there. But you've got Under Armour, Starbucks, Bluebird, BIOS, Netflix. Spencer, where do you want to go?
Yeah,
or do you just want to list off all the big ones?
I was going to start with the Netflix one. They caught an upgrade this morning. Buckingham to buy. Price target raised from $349 to $406. You want to start there, or you want me to run down the whole list, Joel? I can do either or.
Whatever you guys want to do.
Run down the list.
All right, I'll run down the list here. So,
technicals that we like.
Okay, Netflix upgrade, Starbucks upgrade at Mizuho to buy. Press target raised from 56 to 70.
That's after the analyst report.
That's
so
what?
That's just chasing.
Yeah.
That's a chase upgrade.
Bluebird Bio upgrade to buy. Press target stay the same at 170. Teva upgrade at Morgan Stanley to overweight. Price target $27. Under Armour upgrade to Piper Jaffray. That's an earnings play. Price target raised to 32. I think that was it for the upgrades. Downgrades.
Viacom.
Go
downgrades.
Downgrades. We have Viacom at UPS to neutral. Price target $34. We have we don't care about Redhead. iRobot. That was assumed at a buy actually by Canaccord. Not too many downgrades. Sonic downgraded Citigroup. Price target was actually raised to 40.
They're getting taken over. Aren't they?
That's right. I forgot about that. No, just the Viacom downgrade was the biggest one I see.
Yeah, Viacom down at UBS here. I mean, it's had It's come back up, but it seems like you get up to $33, $34 to just find sellers there.
Big
So,
time. Yeah.
is there going to be something that goes on with CBS eventually? Maybe, but I don't think it's going to be at the price that Viacom shareholders would like. Let's talk this Bluebird Bio, Joel, because this is an incredible 4-day run. This stock got down to $102. Next day put on another low, so kind of a double bottom, 103.45. And in 3 trading sessions is now 136 in the pre-market. So you're talking about a quiet little 33-point pop here for Bluebird Bio. I don't even know if there was a catalyst in there. Was there? Was that just market related?
I don't think so. There was a catalyst.
That's a crazy move. Maybe there was a catalyst. I don't follow the story that well. I'm happy, and this is goes to show you sometimes you gotta take your lose.
They had earnings on Thursday.
Oh, they did have earnings.
Yeah.
Okay. But anyways, incredible move, bounce back up here. But you start getting near that 140, and we might test that today. We always say price is memory. That's where you had a lot of trading between September and October.
Exactly.
So I feel like now, holy cow, if you're coming in here now, you're so late to the party.
Yeah, your pre-market, it's up on, bunch of upticks, but maybe
it's upgraded, so it's going to trade up.
10,000 shares.
Are you fading this upgrade? That's the question.
I'm going to see what happens at 138, Dennis. 2 highs. Let's call it 137.70. 2 highs, 137.43, 137.93. That was a double top. A lot of pain for people that didn't get out on that day. So I would see what happens, and then I would go to the next daily highs at 143.40. So big move. I'm not chasing it. Let's see what happens at that number I mentioned. Let's call it 137.70.
Headline breaking from Citigroup here.
Yep.
Names John Dugan, Chairman O'Neill to retire.
Yep. I don't know if that's.
It's not really moving it much.
No.
I don't see any trading at all in it.
Working its way into a big candle here that you had as probably the day that the market melted down. You went from 68.86 to 66.52. So let's see what happens. Couple highs, opening into a high here at 66.08. That was your October 23rd high. Spencer, you want to wrap things up and preview Tuesday?
All right. Thanks to everyone who joined us today, both on YouTube and in our chat at premarket.benzinga.com. Thanks to our guest, Farah Homsy. If you missed any part of our show, catch our podcast. We are on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play. You can subscribe or leave a review on any of those platforms. Please remember that all the information from our show is for informational purposes and not meant to be investing advice. On tomorrow's show, we are joined, as we are every Tuesday, by Nick Shaheen, author of Create Income with Option Spreads. Also, Election Day, obviously, so a big day tomorrow. A lot to discuss. Hope you all have a good day. Hope you had a good weekend, and I hope you join us again on Tuesday.